is it that the Russian $300 billion sitting in Western banks and not being confiscated, while someone, either taxpayers or private donors, have to carry the cost to help Ukraine? Shouldn't be Russia paying the cost first?
Ukraine has less than 4 weeks to negotiate a new deal with its creditors or risk a default that could damage its ability to fund its economic recovery. To explain what exactly this means for the country, I'm joined now by Tymofiy Mylovanov. He's the president of the Kyiv School of Economics and Ukraine's former Minister of Economic Development, Trade and Agriculture. Tymofiy, thanks so much for making time for us today. First of all, I think we need to clarify that this current looming deadline applies to private foreign bondholders, not to public institutions like the International Monetary Fund, for example. Could you help us understand what kind of lenders we're talking about and why this is coming up as an issue now?
Well, this is hedge funds, large investors, private investors throughout the world. And there was a standstill. When the war started, there was a standstill. Standstill means that Ukraine announced that because of the war, it will not pay coupons or dividends for the interest, basically, for a while. And now this time is expiring, the period of the standstill. And therefore, there is a discussion. Now, it's a little bit hyped up, this discussion about the default, because the amount is relatively small with respect to the total debt. We are talking about $20 billion or so, relative to even to the size of a typical aid to Ukraine. This is much smaller, and really it's a bargaining process. It's almost a zero-sum game over, Ukraine says, and the IMF, by the way, backs up Ukraine on this, saying, why should taxpayers of the Western democracies bail out private investors of the Western democracies? They also have to share a burden. And that's the Ukrainian position, whereas the private funders, that's private money. So they want their position. They want their money back. They have responsibility to their shareholders.
And what would the impact be then if Ukraine cannot pay back this debt?
Well, Ukraine can pay back, and it doesn't have to pay it immediately. So it's really bargaining about, whether the standstill will continue or not, and how much a haircut, a discount might be on the amount of debt. So they're basically bargaining. And Ukraine has been historically in this bargaining situation multiple times. And surprisingly, unlike Russia, in the last 30 years after the collapse of the Soviet Union, Ukraine has never defaulted. So I think Ukraine will not default. But the real question is about how much they're going to split the difference. Currently, their positions are pretty far apart, which might mean that standstill or some kind of delay will be prolonged. So if they don't come to an agreement within 4 weeks, then I expect that there will be some continuation of negotiations for the next several weeks or months after that.
What kind of reassurance do these private lenders want from Ukraine?
They basically want a deal. They want something on the paper, in writing, binding, which tells them how much they will be able to receive back and when. And then they want Ukraine to start fulfilling this. And if Ukraine signs this paper, signs this agreement, it will be actually difficult for Ukraine to renege on it, to change the conditions, because then Ukrainian reputation will be damaged, and then Ukraine will have more difficulties obtaining credit and capital from international markets in the future and even during the war. So the key here is not the payment per se, but the fact that parties will agree on something and that the agreement will be honored by both sides. And this is where we are. So it's not the technical moment of default, but rather than whether they can reach the agreement, and the agreement is not reached. It's not a big deal, but it's a negative signal. And once the agreement is reached, whether this agreement is honored. I'm pretty sure it will be honored, but now each party is trying to get a better deal.
You mentioned that the sum isn't particularly significant when you're talking about overall lending or aid, but it can be quite difficult to get a full overview of who Ukraine is borrowing from and to what extent. Perhaps you could walk us through the current institutions and entities that are lending to the country and the conditions attached to those various loans.
All right, so the majority of lending is coming from what's called multinational organizations, or sometimes from governments. Especially during the war, the role of the governments has increased. The United States, the EU, Ursula von der Leyen last year in the summer in London announced a 50 billion euros Ukraine facility for until 2027. So that's a financial support spread out over several years. Before that announcement, it used to be annual support. It would be called macroeconomic assistance. And this was one major source of support for Ukraine through these years during the war and even before the war. The second source of major support is the IMF program. And so we sometimes hear more about the IMF program, but these two types of support go in parallel. Now, both of these programs are alive and well. In Ukraine, funds are being disbursed, and Ukraine is quite on track, actually performing very well on these programs. Now, these programs are not purely financial, so it's not like private money where people are expecting interest and profit based on loans. These are essentially international aid, foreign aid. This is still financial instruments. They have lower interest. This is the mandate of the, let's say, the International Monetary Fund. The shareholders, all countries in the world which are part of the fund, give money to the fund, and they give at a lower interest rate, not at the market interest rate. So money is usually cheap, but then the cost is the conditions, reforms, something else, what's called conditionality that the country has to perform. So Ukraine, for example, has to perform about 206 actions until the end of the year, with total over 400 indicators, and that is a part of this Ukraine facility, European integration, and the IMF programs, and some other programs. Then there is the World Bank, European Bank for Reconstruction and Development, European Investment Bank, and so on and so forth. All the development banks, they also lend money and also lend on some conditions. And sometimes these programs are intermingled. For example, as a part of the Ukraine facility from the EU, there is $8-9 billion amount, which actually guarantees or warranties for private business investments, and they are disbursed through private institutions, multinational institutions such as European Bank for Reconstruction and Development. So the system is quite complicated, but fundamentally it's the IMF, the EU with the Ukraine facility, and then bilateral support from specific countries. There's also the World Bank and other multinationals.
And thank you for breaking it down so simply for us. I am wondering, though, how are the progress on reforms being monitored in Ukraine?
So there is a what's called reform metrics, and we at the Kyiv School of Economics are very proud to be able to be a part of this. We helped set it up. So the reform matrix lists all the conditions together on all promises and treaties that Ukraine has signed. Because usually the way the funding goes, it's a treaty. It's actually international treaty. The Ukrainian government has to, not ratify, but approve it. And some of its elements actually even have to be approved in the parliament. So Ukraine as the government, as the country, commits to receive money and deploy it in some way. So it's not like private money where we can use it any way we want. This is money which they do go to the budget, but they have to be allocated to specific objectives. For example, they cannot be used often for military, or some parts of it have to go to the private sector to support private businesses, or there could be some other conditions. So the first level of conditions is on how money is used. The second level of conditions is about what kind of reforms or changes in legislations Ukraine has to pass. And so there are two aspects to it. One is a very large fundamental gravity force is European integration. Ukraine is passing all the laws it can it has to align with the EU legislation. And that's a lot of work. It's simply a lot of work. And then the second aspect of it, there's a little bit of bargaining and coordination issue between different donors. The United States of America has their preferred reforms or laws to be changed. France might have their, Germany might have their preferences. Then the UK can come in, and it's not part of the EU facility, and it's not the part. Well, it's indirectly is because it's helping. So it's quite complicated, and so all of that has to be coordinated. And now there is a mechanism, the reform matrix, and this mechanism is working. For example, I've been told in recent government meetings when different countries, different donors have been advocating their preferences over preferences of other countries. They were pointed out to the reform matrix, to the sequencing, to the timing, and they agreed with that. So that's one way of doing it. There's also a political mechanism or semi-political mechanism, multi-donor coordination platform, where Ukrainian government and all the donors, all the countries meet together and they discuss what needs to be done, what has been done, and what the next actions are. So there's political level and there's the bureaucratic level, but it is really a lot of work. It's like hundreds of laws.
Yeah, I can imagine maintaining the overview is extremely difficult. So public institutions have these demands for reforms attached to their lending. What about the private lenders? Do they have any particular demands about the future of Ukraine when it comes to the money that they are lending?
Well, this is private lending, private money. Ukraine issues debt on the international market, and it's as any other government debt. So it's really a financial operations. It's not a political or reform operation. So they're looking for investment. They are looking for return. So people who lend money want to earn interest on that, and they have responsibility to their shareholders or to their investors. So it's much less of conditionality. There's no formal, requirement to be in the IMF program. However, of course, this matters in practice because all the investors, all the donors, they look at at what Ukraine is doing, whether Ukraine is in the IMF program, whether Ukraine is on track with Euro integration, and so on and so forth. And security, for example, the discussion about the NATO summits, all those things matter, even maybe not formally, but they matter in real terms, in reality, for the negotiations. Also, the donors have some caveats, usually, some kind of conditions. If Ukraine does something, ridiculously stupid or something outrageous, then they have some protections to do something about their debt. There's actually a lot of structure, how they can renegotiate, how they can demand certain conditions, how they can change the relationship with Ukraine. So all that, but it's true for any private transaction. When I sign an employment contract with my university, even if I don't sign a big contract, still there's fine print which refers me to a faculty handbook and some laws which might be hundreds of pages. So the same is true for the private debt, and they have instruments to protect them. But it is not true that they demand some conditions because it's a private market. It's actually a market operation.
I want to talk about the G7 countries because they have agreed to use profits from Russian state assets in Western banks to lend another $50 billion to Ukraine. What are the logistics of accessing this money, and how quickly will the Ukrainian government be able to make use of those funds?
Yeah, this is an extremely important question, and also it's both politically sensitive and morally just, because Russia has imposed this cost, human cost, lives lost. I have a lot of friends who have been killed by Russian troops. So, this is important for us, and it's important for the world. There should be justice, and the aggressor has to pay. And interestingly, some of the private donors are making this argument for resisting renegotiation by saying, why should we be paying? Okay, you are saying that why should be Western taxpayers bailing out us, but that's not the right way of thinking about the question. The right way of thinking about the question is, why is it that the Russian $300 billion sitting in Western banks and not being confiscated, while someone, either taxpayers or private donors, have to carry the cost to help Ukraine? Shouldn't be Russia paying the cost first? And I think that's a very fundamental argument. And of course, there is a collective action problem, as economists or political scientists say. It's very difficult to find a specific bureaucrat or politician who will sign the right law or might not even be able to do that law. But over time, overall, that's the right way to go. First, it should be Russia who pays for damages in Ukraine. And only then it should be private individuals and taxpayers. Now, what has been happening in practice? In practice, it's difficult. It's difficult because there is a little bit of resistance, because it's in new uncharted waters. There are objective reasons, there are subjective reasons. Some people don't believe it's possible. Some people expect business go back to you as usual with Russia. Some people are sabotaging, because there are infiltration of Russian influence and sometimes even spies and active operations. So we're in hybrid environment. It's not your typical financial market environment. It's really war and security situation. So against this background, what has happened is that some of the countries passed laws which allow confiscation of assets as a countermeasure. Countermeasure is a legal term or legal concept which says that you can seek justice through certain means, and that's a countermeasure. When Russia imposes an aggression or starts an aggression, you can do something back. So it's not that you're confiscating Russian assets, it's your response to the aggression of Russia. So that's the legal argument in very simple terms. I'm not a lawyer, but that's, from the briefs, including that we have written at the Kyiv School of Economics, and also in the US, and in Europe, lawyers basically agree that the assets could be confiscated. Now, financial markets, specifically Christine Lagarde at the ECB, they are against this. They're against this because they believe that it will destabilize the financial markets. I disagree with that. A lot of people disagree with that, but that's basically where the discussion is. So have the financial establishment agreed that assets could be confiscated, all $300 billion would be confiscated today, and we wouldn't be having this conversation about default or even taxpayers' support for Ukraine. So we're not there yet, but we should get there. For now, the agreement is that interests, proceeds from the Russian assets can be used either as a collateral or as direct cash flow to be given to Ukraine. And there are a couple of different discussions. One is to give these proceeds. Another one, as you mentioned in G7, use it as a collateral, the Russian assets and proceeds, so that to give a loan. So it's essentially another loan backed by Russian assets, presuming if Ukraine doesn't pay it off, or if Russia doesn't want to pay for the damages in Ukraine, these assets would be confiscated. So I think we're halfway there towards confiscation of assets, but that's where we're getting.
Can I just clarify, though, so far none of those funds have been made available to Ukraine?
There's been 1.5 billion recently discussion about the interest. So this is on its way. So it's in the beginning. Yeah, but fundamentally, we have not been there yet, but we're almost there, okay?
Okay. Now, Ukraine is obviously prioritizing funding its defense against Russia as well as the reconstruction of damaged infrastructure. I'm wondering what impact this war is having on the government's ability to pay salaries and pensions. So are public sector employees getting their paychecks as usual?
Okay, that's a sensitive matter, frankly, as you rightly point out. Yes, the people are getting paychecks, but the government is really in a very tight position on managing cash flow. In particular, the delay of the U.S. funds or the U.S. aid has made a serious had serious negative consequences, specifically on the both economic situation, but most importantly on the defense situation. And these things, people, it's easy when you live in a democracy, when you're protected by a rule of law, when you don't, live in a wartime environment. It's easy for you to mentally separate. Here's the economy and here's the war. But in a wartime environment, it's the same. Companies being, their employees are being mobilized. Their facilities are being bombed. And military relies on logistics or on cafes to get food, maybe not in the front lines, but everywhere else. It requires or it relies on post, on post offices to deliver post, so it relies on economy to actually being able to function. Someone has to buy veggies. Someone has to grow these veggies. That the soldiers are being given some vegetables for their food. So it's not separate. But in discussions in the Western world, we tend to separate these two things, and we talk separately. Do we have enough money for military? Do we have enough money for paying civil servants, for example, or teachers, or pensions? But in reality is what happens is when we don't have enough money, we actually devalue, inflation goes up. We print money. And that has limits, and that undermines the economy. And eventually, and very clearly, it takes, it puts burden on the most vulnerable, on people who are elderly or people who are not, don't have much savings. So on people who are relatively poor. The war has tragic, devastating effects directly and indirectly. And the indirect effect is through the inflation. So yes, we can pay the salaries, and we are paying the salaries, but we're trying not to create too much of inflation by printing money. And we had devalued the exchange rate. We have seen inflation in Ukraine. It's still under control, which is good news. But there is a cost, and this cost is real.
I want to ask you about the United States as well, because it's been a hugely important donor to Ukraine, but there are certainly indications that this may not continue should Donald Trump become president. What conversations are economists in Ukraine having about the possibility of Trump being elected?
Well, so there is a little joke about this, and it's like I joke through kind of through tears, saying that we have to win the war, stop the war soon enough, because that's all the money we have. So and after that, it's so basically. But if we are more serious about this, what we are doing is we are wrapping up domestic production of defense. We are trying to preserve the funding. We are talking with the EU. We are working with the EU. We're signing a lot of bilateral security agreements. We're building relationships. But it is also true that even in Europe, not only in the United States, the political situation is very different. We have seen what has happened in France with Macron calling the elections and right-wing parties coming to power, which they have their views on. We just seen that. In UK, for the first time, Nigel got a seat in the parliament, although it's just 4 people,
Yeah, we should clarify that's Nigel Farage, the leader of the Reform Party in the UK, which was a big proponent of leaving the European Union, just in case that wasn't clear. But yes, we are seeing massive change here in Europe absolutely. As well.
Yes, and I think, This matters for the future of Ukraine. That matters for the future of the EU. It matters for the future of security, because Russia is not going to disappear after there is some kind of resolution in Ukraine. It's not going anywhere. Its ambitions, its desire and policy of using military force, no matter what the cost is, its approach towards being able to blackmail the world by using nuclear threats. That's going to stay there. So that's going to be a world in which we live for a while, and for all of us, not just Ukraine, the entire, So I think we need to figure out a very sustainable way towards security in Europe, which is robust to political changes and which is robust to specific situations in the war theater, be it in Moldova, Ukraine, Syria, or Georgia, or Armenia, Azerbaijan, or something else. I don't know what next Russia might be doing somewhere. So this is a real issue, and it will be with us. So within that issue, what Ukraine is trying to do is trying to stay as bipartisan as possible. Ukraine is trying to reform itself. Ukraine is trying to fight vested interests, trying to fight corruption, trying to build military, synchronize it with NATO, and talk on a horizontal level, human to human, explain that it's not just our issue. It's not a local war. It's a really massive war. And now we have a threat to European security throughout the Central and Eastern Europe, and maybe more. So we're trying to be a good partner. We're trying to prove and earn trust. and we're trying to be bipartisan. That's what we do, and that's our job to do it. And then we let Western democracies to figure out which politicians they elect. And that's the beauty of democracy. Unlike in Russia, we can predict who will be prime minister tomorrow. While we're in Russia, we can. Well, we will know that prime minister doesn't matter in Russia. There is president, and its legitimacy of President Putin is President Putin himself. So as long as he is alive and there is no coup, that's President Putin. So the beauty of democracies is this uncertainty. But of course, this uncertainty then creates policy uncertainty about the security for the EU. But I'm confident the democracies will prevail in this fight between the systems, because I believe that open systems, democratic, competitive systems, they are superior to authoritarian systems.
And I think that is a good note to end on. Tymofiy Mylovanov, president of the Kyiv School of Economics, thank you so much.